This video is to be used for educational purposes only and is not intended to replace individual research or licensed investment advice. Unique experiences and past performance does not guarantee future results. Trading stocks, options, and spot currencies involves substantial risk, and there's always the potential for loss. Your trading results may vary. No representations are being made that any software or training will guarantee profits or not result in losses from trading. This is the Premier Trade FOREX Report with Scott Norse.
Good afternoon, traders. I'm Scott Norse here with your FOREX Report. Today is Friday, September 14th, 2007. The market struggled to hold the direction this week as a number of strong forces continue to play tug-of-war with the dollar and several other currencies. Expectations that the Federal Reserve will cut interest rates next week are, of course, weighing heavily on the dollar. Although there are a few economists who still say the Fed will hold steady and wait for further evidence that the economy is slowing in response to turmoil in housing and lending. Meanwhile, turbulent stock markets have continued to drive carry trades higher and lower as the yen moves inversely to equities prices. A strengthening yen can also give traders a false appearance of real dollar strength, which is often a byproduct of unwinding carry trades. This has undoubtedly made it difficult to hold trades longer term. This week's economic calendar was not loaded with top-tier data, but most of the news we did get from the U.S. was disappointing. Today's retail sales numbers were much worse than expected and gives doves ammunition in their fight for a rate cut next week. Meanwhile, Treasury Secretary Hank Paulson was on CNBC today, again touting solid economic growth and contained inflation in the U.S. While Treasury Secretaries tend to be optimistic, Paulson is more respected by Wall Street than any of his predecessors. Now wrapping up the day, the greenback may actually be finding strength into the close as it looks healthy in the broad market. Of course, the bigger picture is still very bearish, and perhaps the only hope for the dollar next week is a decision to leave rates steady by the Fed. Now to the big picture. Fundamentals are and always have been the primary force in long-term trends. The resumption of a bearish dollar trend is coming at a time when the U.S. is fundamentally vulnerable. Talks of a currency crisis are circulating more than ever as mounting U.S. debt threatens the structural health of the U.S. economy. Many economists worry that foreigners will soon be unwilling to continue purchasing U.S. treasuries at the current pace for fear of not being repaid. More than half of U.S. government debt is already owned by foreign entities, including central banks and other financial institutions. The U.S. economy is now faced with a housing recession that could cripple many American consumers and send the economy into a recession. Meanwhile, globalization has made the rest of the world more resilient than ever to a slowdown in the U.S. economy. While many major exporters will still be adversely affected by a full-blown recession here, the attractiveness of other currencies over the dollar will still increase. This ultimately could lead to a currency crisis in which the greenback would fall to record lows at a rapid pace. Till next week, have a wonderful weekend. Take care.